Welcome back, everyone, to the New Selling Options channel. Man, am I thrilled to have you here for another deep dive. Today, we're doing a full explainer on a real money trade, right from start to finish. We're going to walk through the exact steps of closing out a winning position, taking that sweet capital, and strategically redeploying it into a highly tactical leverages setup. So we've got some fascinating mechanics to cover today, like how to choose the right ETF, why liquidity is literally your best friend, and the hidden dangers you absolutely have to avoid when trading leverage. All right, let's just dive right into it. Here is the receipt. This right here is what it's all about, folks. Securing the bag. Our MU long position is officially closed, and it executed perfectly. We filled our sell limit order at exactly $1,145.56. You know, when you set those limit orders, you are taking complete control of your exit. You're basically making sure the market pays you exactly what you're asking for, instead of just, settling for whatever random price the market happens to spit out at that split second. So what's the bottom line result? We locked in a realized profit of positive 51.42 SGD. That's roughly 40 US dollars. Now, okay, I know, it might not be a massive lottery ticket win, but listen, it is realized P&L added straight to the account balance. And in trading, base hits win ball games. The most important thing here actually isn't even just the profit itself. It's the fact that we've freed up our capital. We closed the chapter on Moo, locked in the gains, and now we face that classic trader's dilemma. Where on earth do we deploy this capital next so it keeps working for us? Well, that brings us to our next target. We're going to buy long on Microsoft. The strategy here is pretty simple. We want to catch a short-term momentum bounce on one of the biggest tech giants in the world. But here's the catch. We don't just want regular exposure, we want leveraged exposure to really amplify that move. But when you decide you want double the daily return of Microsoft, you're faced with a choice. There isn't just one single instrument out there that does this. You really have to pick the right vehicle, because making the wrong choice here, it can literally cost you money before the trade even gets off the ground. Let's look at how we actually make this decision.
Okay, here is the side-by-side matchup you absolutely need to see. When you're hunting for a 2x long Microsoft ETF, you are primarily looking at two options. You've got MSFU, which is offered by Direction, and MSFX, offered by RecShares and Tuttle. Now, they both promise the exact same thing, 2 times the daily performance of Microsoft. But look at these underlying differences. First up, the expense ratio. MSFU is cheaper to hold at 0.98%, compared to MSFX at 1.05%. Look, neither of these is incredibly cheap. I mean, leverage products never really are. But there is absolutely zero logical reason to pay a higher fee for the exact same underlying exposure. And then, check out the assets under management, the AUM. MSFU is sitting on a massive pool of roughly $780 to $960 million. MSFX? It's a tiny fraction of that, just $26 to $38 million. That is a staggering disparity in size, and it completely changes the dynamic of the trade. So let's break down exactly why that huge size difference actually matters. It all comes down to one word: liquidity. MSFU's near $1 billion pool means it handles millions of shares traded every single day. MSX, with its tiny $30 million pool, is only trading in the thousands of shares. Here's the crucial takeaway. High volume equals tight bid and ask spreads. When you enter or exit a trade with low liquidity, like MSX, the gap between what buyers are willing to pay and what sellers are asking for is much wider. And that wide spread, it instantly eats into your profits the absolute second you click buy. Liquidity is the ultimate tiebreaker in leverage trading. It honestly makes MSFU the clear, undisputed winner for pretty much any trader. Now, before we look at the actual entry, we really need to take a serious instructional pause. I have to issue a quick health warning on these single stock 2x ETFs. You absolutely must understand a concept called volatility decay. Because these funds reset their leverage daily, the daily compounding math can actually work against you. If Microsoft just chops sideways or it gets highly volatile without establishing a clear upward trend, both of these ETFs will literally lose value over time. You could have a scenario where Microsoft's actual stock price ends up perfectly flat after a few months, but if you held a 2x ETF that whole time, your position would be in the red. It is the silent killer of leverage portfolios. Because of that decay, we have to follow a very specific tactical leverage playbook. You've got to remember that these are designed strictly as daily trading vehicles, not multi-year set-and-forget investments. You want to avoid holding them during periods of sideways chop at all costs. Instead, we use them surgically, precisely to catch clean, short-term momentum waves. And the real beauty of using an ETF like MSFU for this, rather than just buying call options, is that you completely bypass the risks of options gamma and implied volatility crush. You get all that amplified momentum without the complex options Greeks constantly working against your position. All right, bringing the theory back into reality, let's take a look at the new setup. Having filtered out the inferior choices, we went ahead with MSFU, successfully establishing a brand new position of 70 shares. We took that sweet capital we freed up from our MU win, applied our strict liquidity rules, and smoothly rotated it right into this high probability, high liquidity instrument.
Let's look a little closer at the anatomy of this entry. The absolute crucial number here is $21.86. That was our exact limit order fill price for these 70 shares, creating a nice, clean initial position size of $1,530. Using a limit order here is just absolutely critical. Securing a tight, filled price this way is exactly how you have to handle high liquidity, leveraged ETFs. It protects you from getting stung by any sudden, unexpected spread widening, especially if you're trading near the edges of regular market hours. Our average price ended up settling just a single penny higher at $21.87. Really, it's a textbook entry into a highly tactical position.
To wrap up today's explainer, let's quickly review the blueprint we just executed. Step 1, we locked in our realized profits on MU. Step 2, we actively filter the market for the best high liquidity vehicle, choosing MSFU over MSFX to save on those fees and spreads. Step 3, we executed the entry flawlessly using precise limit orders to protect our capital. If you found this breakdown helpful, please make sure to smash that like button and subscribe to the Noob Selling Options channel so you never miss our future trade breakdowns. Now, I'm going to leave you with this final thought. We've built the absolute perfect tactical setup, but at the end of the day, the market has the final say. So what do you think? Does Microsoft have the strength right now to deliver that 2x momentum lift we're looking for? Let me know your thoughts in the comments, and I will see you in the next explainer.